Welcome to today's daily reports market analysis videos with me, Richard Perry, market analyst at Hantech on Thursday the 6th of February. Well, we have had this continuation of the risk rally that we've seen over the past few days really. It's interesting that we've got the equity markets which continue to jump higher. Look at that S&P 500, it is within sniffing distance of all-time highs again. It's so close, and if you look at the futures, which are currently 0.4% higher, then you're looking like that you're going to get all-time highs today. So certainly that recovery in the last few days has been fairly significant. We've had pretty much throughout this week recovery days through risk appetite, given the fact that we've had a string of measures brought through by China surrounding monetary policy, the liquidity measures by the People's Bank of China. You've also seen last night they announced, or today they announced, that there was going to be a cutting of the tariffs on 75 billion worth of US imports. So that has certainly helped engender the whole risk improvement, and we've got that continuation today. We've seen interesting weakness coming through on the yen. And also the fact that the oil price has rallied quite sharply in the last day or so. Actually, for the first time in a long while, actually, you've actually seen that the oil price closed higher and didn't then just instantly fall back again. We've seen further gains today, so it's a second day of gains on the oil price. So is this a bottom now we've got in place on oil is the question. My analysis on oil is on the daily report on our website. So subsequently, we're looking at a risk rally, and that is sort of just stabilised a little bit today. That dollar rally that we've seen, actually, interestingly, in dollar actually trading around sort of two and a bit month highs now. That US dollar rally has just stalled a little bit of consolidation across the Forex majors today. Nothing too decisive in terms of direction. It's interesting that that's coming as the gold price also starts to build a sort of a basis of support again. So we'll need to watch out for that, and I'll talk about the technical implications of that as well in my analysis video in a short while. But some continuation of the risk rally that we've seen. Now, we do have payrolls tomorrow, but in front of payrolls you've got a fairly light economic calendar. Nothing really doing today, only really jobless claims at 1:30, expected to be 215,000, and you can see here that's pretty much the average of where we've seen. That's a 3-month average there, and it's pretty much there or thereabouts around the average. So no great shakes to come out of the weekly jobless claims today expected, but we do have payrolls tomorrow, so watch out for that. You could see a bit of consolidation on markets in front of payrolls. Now, my chart of the day is the Swiss franc, and what we've seen actually in the last few days has been this risk rally, which has really hit the Swiss franc hard. The dollar has rallied, and the Swiss franc and the Japanese yen have suffered. So safe haven plays are out of vogue at the moment, and subsequently we've seen a rally on dollar Swissy. Is it enough to form a recovery? Well, look at the momentum indicators. You can see that there is something building. Look at that bull cross on the MACD lines, followed by a bull kiss back in early Feb, and the MACD lines are rising at levels not seen since mid-December. The stochastics are looking more positively configured. The RSI is above 50 and is also at levels not seen since December. So there is an improvement in momentum, but can it complete this base pattern? A move above 97.67, which was the late January high. On a closing basis, that, as you can see, is a pivot with an old low from December. So a close above that would complete this base pattern, but until that is seen, you've got to really treat it as a range play, but a range play which is more positively configured. And you can see that buying into weakness on that range play, you've got a nice sort of pivot area of mid-range support between 97 figure to 97.20. So any sort of move that dips back into that finds support and builds again, I think that would be a buying opportunity, because I think there is an improvement, and certainly if the coronavirus or the market outlook for risk appetite and sentiment surrounding the coronavirus starts to sustainably improve, then I think you're likely to see the Swiss franc under pressure, and that would drive dollar Swiss higher. So the technicals pretty much point towards that as well. The hourly chart indicators around the 50 mark on the hourly RSI seems to be a decent entry point level, and above neutral also on the hourly MACD line. So any sort of retreat back towards 97.20, maybe 97 figure would be positive. It would really take a move below this reaction low that we saw yesterday, which I can get my crosshair on it, 96.75. A move below that would really sort of take a more of a negative sort of tilt to the indicators on the hourly chart, and subsequently would sort of dissipate any real recovery effort. But I think for now we're certainly looking to buy into near-term weakness on dollar Swiss franc. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.